Good afternoon and welcome to the Closing Bell. I'm Jane Searle from The Street on Tuesday, October 22. Markets closed at another record high and are on track for the best annual gain in 10 years. Lacklustre jobs data today lifted speculation that the Fed will maintain stimulus at least until 2014. The Dow, the Nasdaq and the S&P 500 all closed higher. On the commodities front, gold ended higher while oil ended lower. Earlier, I spoke with Ben Willis of Albert Fried. He suggested markets were rallying on the lower unemployment rate rather than the prospect of extended stimulus.
My interpretation is that the unemployment headline number dropping was a continuation of a trend that indicates the world economy, the United States economy in particular, is getting better. And you couple that with the increase in hourly average earnings, which suggests those people that are working will have more money to spend. That's an economic positive.
Now we see the market continuing to hit these fresh highs every day. Is it likely to rally through to, say, January when we come up against the issue of the debt ceiling again, or are there any imminent threats to stopping the rally?
Well, I think the imminent threat to the market is the rapid rise we've seen. That's not healthy for a market. We did have about a 5% correction last month. That was healthy. I do believe the market can continue to move higher, but this kind of velocity is a little dangerous. It needs to slow down, maybe backfill a little bit as we call it, but in and of itself, yes, the market can continue providing all the economic data we're seeing throughout the world, not just the United States, but China and Japan, continues its trend.
So given that rapid rise that you've mentioned, do you have any concern around, say, valuations at the moment?
I don't really, in the sense we're kind of in the middle of the road when it comes to most valuations. I mean, you have crazy stocks. Today, Netflix was all over the place, but their valuations are circa 1999. It's just absolutely crazy to watch that happen. But the broad market, the economic data, the earnings we're seeing coming in a growth of about 3.8% if you throw out J.P. Morgan's crazy numbers. So those are telling you, again, the economic trend is your friend, and it's telling you it is improving.
In corporate news, Netflix shares reversed early gains, falling in afternoon trade after Chief Executive Reed Hastings said the stock's rally was due to investor euphoria. Netflix beat earnings expectations today with a strong result. Apple shares were also slightly lower after the company unveiled its new iPad Air and iPad Mini. Apple says its iPad Air is 42% thinner and 72 times faster than the original iPad. Luxury brand Coach shed nearly 8% to its lowest level since April after sales missed expectations. Rivals such as Tory Burch, Kate Spade and Michael Kors are threatening its market share. Coming up tomorrow morning, live from the Nasdaq in Times Square, our John Marino will have all the overnight action from overseas with stories you should be watching to get your trading day started. From The Street, I'm Jane Searle in New York. Have a great evening.